Welcome back. Let's get into this market movement now. And Chinese stocks initially fell this morning, heading for what was their worst week since May, as a sharply rising death toll from the coronavirus outbreak kept investors on tenterhooks, despite policymakers' efforts to calm nerves and, of course, trying to boost liquidity. China's economy could be disrupted in the first quarter due to this virus outbreak, but it is expected to recover once the virus is brought under control. Chinese trade figures due out today are set to offer an early glimpse of the effects of the virus on the flow of goods, but that data is yet to be published. The Nikkei in Japan losing around 0.2% today, unfortunately, to close at 23,827 points. The Hang Seng in Hong Kong as well, down over 0.5% there, 27,339 points, while the Shanghai Composite did manage to close in the green, and it was the only gainer, picking up 0.33% there. Over into the United States then, well, the US stocks gained for what was a fourth straight session last night, and Wall Street's main indices hit record highs as concerns eased over the economic fallout from the coronavirus outbreak in China. Now, China said it would have additional tariffs levied against some US goods, seen by analysts as a move to boost confidence after the fast-spreading virus disrupted businesses and sparked broad market volatility. The Dow Jones Industrial Average rising 0.3%, 29,379. The S&P 500 gaining a similar mark, around a third as well, at close of trade, 3,345 points there. The Nasdaq Composite adding 0.2%, 572 points there. Let's head on over now to the European market, however, how things have fared there. Well, it's unfortunately in the red today, so not necessarily a good day out in London, Germany or France. So the European market taking in some negativity, unfortunately, to close out the week. The coronavirus certainly still impacting some of that market movement, with investors, as I said a little bit earlier, still on tenterhooks. On the local front, well, we've had a fairly positive week, really, but today, unfortunately, it's not to be for now. It's 57,266 points in this lunchtime trade for the JSE All Share. Industrials also suffering. Of course, let's consider the fact that the likes of Naspers do, of course, trade out in Asia, and having seen some negativity there, that means locally we may begin to suffer as well, and that is clearly evident in these numbers. Financials also headed into some negative territory. However, the resource shares seem to be doing a whole lot better. Gold counters continue to be those of safe haven shares, and now investors continuing to perhaps plow some money into that segment ever so slightly. Platinum markets also going higher. Onto the resource front, well, gold has remained above that 1,500 mark and now heads towards 1,600. If it does get there, that would certainly be a psychological mark for that, for the resource itself. There, 1,568 in this lunchtime trade. 967 for platinum, slightly down, and that oil price continuing to falter a little bit there. But Russia has agreed to a recommendation by OPEC, and of course, together they become OPEC Plus. And the recommendation is to perhaps cut production a little bit more and create deeper cuts with regards to supply there as well for oil. What that means for the price of oil, well, that should be headed higher very soon if we see that continue to happen across the market. On the currency front then, well, it's 15 Rand and 3 cents for a US dollar. We did breach that mark last week Friday, a week on, and we've breached the mark again. So negativity remaining in the local market then at 15 Rand and 3 cents for a US dollar. A pound will set you back 19.43. It's 16.45 for a euro. And of course the BRICS currencies as well, then still getting some positivity over here ever so slightly as well. Let's head on over then to Warwick Lucas as we continue to get this market movement, and he joins us of course here this afternoon. Warwick, thank you so much for the time, appreciate it. The coronavirus has been nothing short of absolutely crazy for the markets. It's created absolute massive negativity, and we're seeing it again this week, even though we did get initially a sense of positivity.
Yeah, absolutely. And I mean, clearly from what we can see, whether it's the case of Wuhan, where it originally started, and by the way, I think they're now starting to call this the Wuhan acute respiratory syndrome or WARS. It clearly spread massively there. We saw the example of that Japanese passenger ship where approximately 60 passengers caught it. So clearly it has quite a fast spread. It is encouraging to see some discussion points there about drugs that are showing some potential in restraining it. So we still are at a point where we just don't know. There's some encouraging noises. Clearly doctors working some horrendous hours to try and confront this, but it's still really too soon to tell.
Yeah, the difficulty, I suppose, with a scenario like this is just the market not knowing where to trade, and a lot of it becomes selling the rumor and then buying the fact afterwards, and it seems like they're selling the rumor quite a bit now.
Yeah, look, it was very much the case that the market, after a heavy sell-off the previous week, got rather ahead of itself and a bit cocky and overconfident this week, and we just aren't out of the woods either way. I mean, progress looks good, but we can't say that we can take it to the bank yet, not by any manner of means.
What does that mean, though, for the oil price? I mean, Russia having committed, or rather agreed to the production cuts, perhaps, that OPEC has suggested, does that mean the market sort of shifts to these lower amounts of supply for a sustainable basis, or do you think it's really just with the coronavirus in mind?
I think it's predominantly with that in mind, and also perhaps they're sort of playing more of a psychological game than anything else. I mean, at the end of the day, those markets are always about some kind of balance. Now, China is the world's biggest consumer of oil, so that's a key question. Then, as to what is the economic impact of the coronavirus, it really is very difficult to say. But I mean, for example, if one looks at weekly passenger numbers, likes of trains and cars and so on, I mean, those are between 60 and 80% down weekly on annualized prior levels. So that is, I mean, a very, very severe knockoff there. In terms of what's the impact on economic data, well, if we haven't got this contained by Q2, it's going to be at least a full year's percent on GDP down.
Is that locally or internationally?
That's internationally.
Sure.
Sorry, in terms of China.
Yeah. Okay.
So obviously the biggest hit happens to China. I think, in terms of what's our prior comparatives, well, there's very few in the past. I mean, we saw the SARS virus, but I mean, the Chinese economy was much, much smaller than it was then compared to now. It was probably about a third of the size. And I mean, the previous equivalent is something like the Spanish flu of 1918, where you can't get any decent data because it was after the First World War. So we actually do not have a good working model of prior events to work with.
But a sustained period of this is certainly going to be dire, and that is the unfortunate
negative
part in all of this. So a solution does, in essence, need to be found. All right, let's try and turn our attention locally and outside of the coronavirus, if even possible. Impala Platinum, them coming out and really finding themselves perhaps between a rock and a hard place here, because platinum group metals have completely outshone the market, but unfortunately they have smelters which needed to go under maintenance, so weren't able to take full advantage.
Yeah, look, I think if one looks at the current good times that Impala is enjoying, it's perhaps a little too easy to remember how many years of absolute trauma and difficulty that they have been through. I mean, from 2013 to about 2018 was absolutely appalling for them. So in many respects, they ran a very, very tight ship. I mean, costs had to be seriously contained. And I guess what happens in a company when it finds itself in a place when it gets some serious relief from such hard times is that it also starts spending a little bit. The computer that got run on more years than it should be, with older software than it should be, that gets replaced and so on. So possibly a little bit of extra spending coming through there. And of course, a key bit of equipment like a smelter, I mean, a bit of maintenance. Well, finally things looking good, let's maintain and repair it. I think the key still for both Impala and South African platinum miners generally is that word platinum, and all of this prosperity is coming through actually from palladium and rhodium. Platinum is still absolutely in the doldrum, and I think what they're all looking for and hoping for is more and more a change in the cocktails towards back towards platinum and a little bit away from palladium, because that suits our miners' profile.
That's really going to be a difficult one in the market, though, to try and convince them to kind of turn their minds back.
Absolutely, it's difficult. It means redesigning engines and so on. It's not a simple change.
Sure. Okay. Unfortunate news on the other side, with metals still at hand here. ArcelorMittal saying that they're going to drop around 400 jobs. It was just last month that they said they'd drop 1,000 jobs as well. It's getting bad to worse here.
Getting bad to worse, definitely. I think they have been in a particularly unfortunate position. Look, they had a Soldana plant, which was, I mean, for a long time it was a real problem and a lemon. They had flagged long ago that they were going to close it. They have closed it. But they're in the situation as well that they're suffering a real cost crunch. So, I mean, their sales are down, their volumes are down, and yet, I mean, the iron ore costs are up 22% in rand or 12% in dollars. Sure. They are getting absolutely crunched by costs. And can they make it? I think they can make it, provided no adverse events come through. So, hopefully the unions can be persuaded to work with them on this one.
Sure.
I mean, it's a very difficult position.
Job losses all around, really, in South Africa's industries, not just in steel or manufacturing, but really mining across the board. It doesn't matter. Warwick, thank you so much for the time. Appreciate it. We'll do this again, of course, next week. Thank you so much for that. Warwick Lucas from Galileo Capital joining us then, helping us unpack that market picture. Up next.